Hey guys, Jason here with the Friday tip of the week from Positive Real Estate. Maybe a bit of touch base, a bit of excitement, a bit of energy. Hopefully I can share some things today that might be interesting to you. Going to do two things today. Going to talk about some articles that have come out in the marketplace at the moment. Some negative sentiment out there for people and how to get through that and how to focus on the facts for property investing, because that's what we've got to do as property investors. Hey, and tax time's coming up. Make sure we get all of our ducks in a row and get all of our tax things organised and get our refunds done and make sure we get the money in our pocket and don't leave it in the ATO's pocket, because they're not going to give you any dough. Hey, listen, there's an interesting article just recently I read today. The newspapers are making a big hoo-ha. Property in Brisbane listed for $700,000. On the market for 200 days. Now it's listed for 400,000. The sky's falling, blah, 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 blah. And I thought, okay, well, let's have a look. Let's not get caught up in the hype and the garbage that this media frenzy love to perpetuate, which is usually incorrect and inaccurate. And let's find some facts behind this property. Okay, so I went and had a look at the property. I searched it on RP data. I've got access to that sort of stuff. Any normal person can get hold of that sort of information and data. So I went as a property investor and I decided to ignore the garbage and have a look at the facts. Here's the facts. The lady who owned this property has passed away, unfortunately, and it is now a deceased estate sale. Okay, the family who takes that over has decided to try and sell the property for as much money as they could get. The real estate agent has overpriced the listing. In essence, it's called a term in real estate. The agent has bought the listing. The agent has bought the listing. They have priced the property too high. They've listed the property too high. I did my research. The thing shouldn't have been listed for any more than $390,000, $400,000 in the beginning. So the agent has gone and listed it and priced it too high because they wanted to get the listing. They put it on the marketplace and they have done what we call vendor conditioning. I've seen it 1,000,000 times in the marketplace, and they have conditioned the vendors down, 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 and now where is it at? $400,000. Was it worth $700,000 even when it got listed? No, it wasn't. That was absolutely way overpriced, and the market knew so because the market ignored that property to begin with. So, ladies and gentlemen, investors out there, I plead you, ignore the garbage that is out there, this negative sentiment. Have a look at the facts behind it and make sure you make good decisions. Who remembers the GFC, the global financial crisis years ago? The sky's falling, everything's going to go down 40 or 50%. There's a chap in the marketplace again, and in 2008 he said that the prices of property were going to fall 40%. Well, he was wrong then, and he's saying exactly the same thing now, and he's going to be wrong again. In general, prices in Australia will stay fairly stable. Every market has its turn. I saw another one here going, Melbourne house values declined for the first time in 2009. Well, hey, that is correct. But since 2009, Melbourne prices have gone up in value. This is normal. This is what happens. Prices go up for a while. They flatten out. Sometimes they even correct because they were overpriced at the peak of the market. And then they go up again later on. That's a normal thing. Melbourne's going through a normal cycle. And do you know what? If you're in Melbourne right now and you've got property in Melbourne right now, now is a prime time. Matter of fact, 6 months ago was the best time. If you would have been listening to Positive Real Estate, we were telling you about 12 months ago to lock in your loans, get your equity set, and so you can take that equity and go to the next market that's ready to invest, whether it's a cash flow market, whether it's a capital growth market, whatever you're after as an investor. Melbourne, what's happening is normal. It's happened all over Australia. It'll continue to happen again. So understand, this is what happens in the real world in this place. You get ups, you get downs, you get flat times, okay? This is what we get as property investors. If you structure yourself properly, you watch your cash flows, you make sure you're not too negative cash flow, try and stay positive cash flow as a property investor, you're going to be able to get through all of these sorts of things if you do it right, okay? And so that's why you need to come and chat to people like, say, maybe us at Positive Real Estate, or a good finance broker, or a good advisor. So let's get into the tax stuff this month, guys, because, hey, the end of financial year is coming up soon, and we've got to get ourselves in position. Every property investor out there has the ability to use tax deductions very, very effectively to reduce their tax or have a big claim, a tax claim at the end of the year, legitimately, legally. And I know many property investors who have minimized their tax significantly, potentially even to zero, and you can do that as a property investor. So I'm not talking about losing money out of your pocket. When you invest in property, you've got two parts to a property investment. You have got the land and you have got the building. And what happens is the land price goes up in value and the building itself goes down in value. And when that building goes down in value, that is what's called a paper loss. And that's fantastic. We want to claim that paper loss as an investor. It's called a depreciation schedule. Now, we highly recommend a company called Depreciator. They support us at Positive Real Estate fantastically, and they have given us this secrets of depreciation every investor should know. The statistics say that 80% of property investors out there right now are not claiming the maximum amount legally allowed to be claimed on their depreciation. And why is that? Because they use accountants or they use developers' depreciation schedules, and they are not accurate. They are not qualified to do those. An accountant is not qualified to do a depreciation schedule, and nor are they any good at it. It's not their job. Nor is the developer. They might get a simple one done, but it's not specifically for the property itself. So here's what I encourage you to do. Make sure you get your depreciation schedules done. And here's a little tip. You only have to have your depreciation schedule done by the time you get your tax done. And we all know that you can do your tax a little bit after June 30. However, if you pay for your schedule just before June 30, you get to claim it in that tax year. So pay for it now and maybe get it done in July or August when you get your tax all together. If you come along to one of our property information nights this month, we're going to give you this 30-page report on depreciation, on some tax tips, what to claim, what you can claim, what you can't claim. You might decide right now to get a few maintenance bits done in your property investments so you can claim them 100% in this year's tax coming up, all completely legal. And we're going to give you that 30-page report when you come along, and I'll show you when you come to one of the property information nights. We'll give you the voucher of how to get $100 off your depreciation schedule at Depreciator this month. So that's fantastic. Give you a bit of a discount, a reason to get along. So listen, guys, a couple of reminders, a bit of a reminder. Ignore the hype and garbage in the marketplace. Research the facts, everyone. And the facts usually are very, very simple to interpret. If you need a hand, hey, come along and ask some of our guys and girls and coaches at Positive Real Estate. We do property information nights, and we talk about facts and simple strategies that are really powerful, that we can make money in any market in Australia. We've done it again and again and again. The GFC, we went into Sydney really well when everyone was running away, and we made hundreds of thousands of dollars in equity gain by doing the opposite to the marketplace. You've got to be careful, you've got to be researched, but when you make good decisions based on facts, you mostly get a good outcome if you get good facts behind you and get some good support. So hey, listen, hopefully that was interesting. Maybe some encouragement there to get out there in the marketplace and ignore all the hype and the garbage, and keep investing and keep rolling forward. If you want some support, you want some more information, you want some more knowledge, come along to one of our property investment nights, and the guys and girls will talk about all sorts of things: how to minimize your taxes, how to do the good strategies, and more and more tips about property investing. They've done a lot of stuff. So hey, hopefully that was good for this week, guys and girls. I'll look forward to seeing you out there in the marketplace. Until I see you, take care and bye for now.